From thetraderguy.com, this is Chris, and I'm taking a look at the upcoming July 2nd trading week. This is pound dollar cable, if you will. And you can see the weekly chart has formed another hammer. This is interesting because we continue to see hammers form as we follow or fall down towards 130, and I think this signifies that there is a bit of a relief rally coming. Now, the question is whether or not it can sustain itself. I have a level that I'm going to go ahead and mark on the chart right now at 136, which for me changes everything as far as this pair is concerned. Now, having said that, I think in the short term, we are going to continue to see the 130 level heavily defended. When I zoom out, the moving average here is the 200 moving average, which is for the daily chart, not the weekly chart, but it does seem to have an effect there. So when I turn the daily chart into focus, you can see we had a nice hammer on Thursday, right above 130 at the same general location, 130 and a half or so, that we have seen this before, and then we shot to the upside. However, there is the 200-day moving average, which will certainly cause a significant amount of attention. The 135 level, the 133 level, you can see that there are multiple areas of concern. So at this point, you have to make the decision as to whether you are going to try to hang on for an investment. And at 136, I think that's when everything changes, because by then you'll be over the 200-day moving average again. And of course, this cluster, 135, will be left in the background. So that's the magic number for buying for the longer term move. In the short term, I'll go ahead and drill down to the 4-hour chart. We do have plenty of room to run to the upside if we can sustain the gains. I suspect at best we're looking at back and fill. So I think most of you out there are going to be looking at this as an opportunity to sell closer to 135. Relief rally, that's about as good as this gets. Above 136, then I become a buyer. And at that point, I would not only become a buyer, but then I would start to look into Elliott Wave, which is something that I don't really do that much. But that would be a wave 2, and then this would be a wave 3. That's your impulsive wave. The impulsive wave, wave 3, should, at least in theory, be the longest of all of it, meaning that there are a lot of profits to go. Once we clear 136, I look at it as such. I recognize that buying on the dips could continue to be the way. So in summary, short-term bullish, but we have a lot to chew through between 135 and 136. I suspect short-term traders will continue to try to push this market. Longer-term traders are going to pay a lot of attention to this area. So be aware of that this week. We could have a run towards that, and the real decisions are made there.